Hey, what's going on, my friends? We have another updated look at our dividend portfolio where we contribute $25 every single week. And we started this portfolio just back on February 1st. We did have one other larger contribution. We'll dive into details there in a moment. But as you guys can see, we are up 49 or 0.49% over the past day. However, over the past week, we're down 0.79%. The past month, we're down 2.99%. And the past quarter, we're down 2.36%. But the past year and all time, you can see we're actually up 8.27%. So like I said, our current value of our portfolio is a total of $1,788.66. So we started this back on February 1st with $100. And then as you guys can see around March 5th, we added an additional $500 that we got from the stimulus check. Yes, we used that money towards bills. And maybe some of it went towards rent. And then a little small portion of it we decided to invest in our future with our dividend portfolio. So we added $500. And aside from those two larger contributions, everything else has been $25 every single week. And you guys can see this is a nice, consistent, steady, upward incline. Now, when we looked back at the past quarter, past month, you can see this nice dip here. And, even this past week, the market has been, it's been pretty bloody. And to know that we are still up quite a bit, 8.27% with our dividend portfolio, I'm pretty satisfied. I think a lot of people, have been, my other portfolio, my Webull portfolio, which has a lot of my swings and in more of my trades, not as much as I don't do as much investing over there. That portfolio is hurting. I would love to be only down 2.99% with that portfolio because this market has been very, very bloody. You hear them sirens because it's just been like an emergency. Like you got to call the police, call the ambulance, call firefighters. Things have been bad. But my friends, that is why we have this portfolio, and that's why we continue to contribute $25 every week. We didn't stop and say, okay, because of how bad the market is, we're not going to continue to invest in our portfolio. No, we continue to do so, especially when things kind of dip or plateau a little bit. And the reason why you want to do that is because you're getting the opportunity to buy, any company you have in your portfolio. It doesn't mean it's going to be the same companies that I have in mind. But, if you have similar companies or if you're thinking about adding some of these companies to your portfolio, especially if I have some in the red and if I really believe in them, or should I say if you really believe in any of these companies in the red, well, essentially you're getting a better deal than what I currently have. You'll be able to buy it at a cheaper price because, hey, that stock happens to be in the red. It happens to be down, which if you really believe in that company, then look at that as a sale. Look at that as a discount. Look at that as a coupon. Look at that as the opportunity you've been looking for to buy that company. And so with our dividend portfolio, yes, things will be down, but we continue to add to this portfolio. And hey, it has it all allocated appropriately. So if you happen to be up big on a company and it starts to take up a larger piece of your pie, then you'll be in a position where when you add that next $25 or the $50 or however much you are contributing to your portfolio, well, it knows it's going to allocate that money appropriately among the stocks that don't actually have your target price and are aligned with your actual price. And it'll take care of that for you if you're using M1 Finance. This is part of the reason I love M1 Finance. And when you create your own pie and you allocate, you determine what percentage of the pie you want a particular stock to be. So we have one pie and we said, hey, let's just add 10 companies and each one will have 10%. And it will take care of the rest for you from there. So if NEWT decides to run up a crazy amount and it ends up being about 20%, well, when you add more money to your to the portfolio, it won't add that money to NEWT because it's already accounting for such a larger portion of your pie. Instead, it's going to invest it appropriately among the other uh, 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 slices, as they refer to it, slices, because this is your pie. Each company is a slice, and all the slices amount to one full pizza or pie. So, my friends, if you are new to investing, definitely consider using my link down below to start investing with M1 Finance. You can create your own dividend portfolio. Tomorrow, we will have our growth portfolio update. And yeah, it's just such an easy to use platform, and having it just be on autopilot takes the concern that you might have, especially with this type of market, away. Because if a company is down bad and your portfolio is dipping, it's tough to, especially when you're new to investing, it's tough to want to continue to add money to it and thinking, because the thought is potentially, it's creeping in your mind, although you believe in these companies, or at least you should if they're in your portfolio. Despite that, it sometimes can be tough to fight that urge to say, oh, this is going down and it's probably going to keep going down. I think I should not only stop buying, but if anything, maybe actually I should sell. And again, if you want to swing trade, okay, yeah, I would agree with you. But if you want to invest, I don't think you should be thinking that way. And I believe using a broker like M1 Finance helps to reduce a lot of those, challenges, a lot of those thoughts, and ease the process, ease this experience of being able to grow your portfolio, because I just set it on autopilot, and every week it just goes in here and it allocates that money appropriately. But I wanted to dive in and look and see all time from a return perspective, who is doing the best, who's doing the worst, where do things stand? Well, of course, as usual, we have NEWT at the top. It's currently at 38.69%, killing it as usual. And then PepsiCo, which I don't know if this just took off. I don't remember Pepsi being up this high recently. But Pepsi is the runner-up this week at 29.18%. Then we have Procter & Gamble at 17.92%, followed by Realty Income Corp at 12.42%, JP Morgan Chase & Company at 7.54%, Coca-Cola at 7.21%, Innovative Industrial Properties at 4.94%, Johnson & Johnson at 0.26%. And then in the red, down quite a bit, is Verizon Communications at negative 7.38%, and then 3M at negative 8.63%. Sorry. Things aren't looking so hot for Verizon and 3M. Now, for me, especially if I was someone out there who's like, okay, I want to consider adding some of these companies to my portfolio, or I already have them in there, and I don't really add every week, but I want to throw a larger amount of money at one or two of these companies. Well, certainly you want to do your due diligence, look into the companies, see what else they have on their plate, what else is going on, because a company like 3M, they are not going to be, 3M's not going down. 3M you don't have to worry about that. They will be around for a while. And this, seeing how low they are, how down they are, it's like this might be that great time, that great opportunity to buy them and add them to your portfolio. Because again, although I'm down, if you are new to adding them to your portfolio, that means you'll have them at a cheaper price than what I paid. And once if I'm up, then you'll definitely be up. But you'll be up before me if you get it now. I hope that makes sense, because a lot of people, I know there's a lot of people new to investing that don't, they'll just see a company like NEWT and they'll say, okay, I'm following this portfolio. NEWT has been killing it. And I'm not trying to say if they're killing it doesn't mean they won't continue to, because obviously NEWT has been the top dog pretty much since day one. But NEWT is going to definitely be volatile, when the housing market and real estate starts to feel it a bit more. So I don't expect NEWT to stay up here at the top like this. I know they're not going to. I know it. And I hope you guys are prepared for that. I hope you're not someone who's new and you're, like I said, you see them running it and you're like, oh, let me jump on board here, because you might jump on board right when NEWT decides to not kill it so much, if that makes sense. Whereas someone like 3M, they're at the bottom of our list. They've been here in Verizon for a little while now, not too long, but a little while now. And ultimately being in a position where, like I said, this is going to kind of flip to some extent, probably at some point. Now, I'm not saying 3M necessarily will be number one on our list, but I don't anticipate them being at the bottom like this for forever, for sure, but probably not even too much longer. I can't say for sure when this will change and flip the script, but yeah, I would absolutely consider looking into some of the companies that are in the red or low, because it might mean there's potentially something brewing up where or like I said, it just might be a great buying opportunity. And at the same time, like PepsiCo hadn't been up here so high. I think this is the first time I'm seeing them at number 2 on this list. I could be mistaken. They might have been up here like, yeah, I mean, we look at it past quarter, you can see them killing it right there. But yeah, I mean, I wonder what is, let's see, there's something going on over here, or Doritos and Twitch rivals North America take this year's Doritos Bowl to another level. So, okay, we have like the Dorito Bowl. Coming next, dividend dates. Okay. 2 dividend aristocrats. And I wouldn't be surprised if some of these might potentially mention Pepsi Co. So you are seeing Pepsi starting to appear in a few different places where they might be getting some good attention, and people are like, whoa, what's going on? Why is Pepsi so cheap right now? And people are, drawing attention to it again and potentially helping to give it that buzz. I actually thought about that's it's funny that I'm seeing McCormick here, because I don't feel like anyone ever talks about McCormick. And if anything, maybe they mention like, what is it, Campbell's Soup or something. Sorry about that. I actually like McCormick and almost added them to this portfolio. I can't remember over who and why I decided not to move forward with them. So it's interesting to see, like, I haven't seen like anyone talking about them like ever. But let's dive into what this says about Pepsi Co. But yeah, we want to jump into PepsiCo. That's what we want to see what this says. It says, speaking of companies managing to navigate supply chain difficulties, there's PepsiCo. The drinks and snacks mainstay is hiking its quarterly distribution following a successful quarter. The raise is 5% to slightly over $1.07 per share. It's likely PepsiCo would have bumped it higher anyway. After all, the company is a dividend aristocrat that's nearly a dividend king, having lifted its payout at least once annually for 49 years running. While drinks and snacks certainly require some innovation and plenty of marketing spend to succeed and grow, this isn't a relatively high expense business. That's one reason the company is a cash-generating monster with billions flowing through its coffers every year. In 2020, for example, its free cash flow amounted to almost $6.4 billion, nearly 20% higher than the 2019 figure. PepsiCo is far from lazy, though. Management has been effective in boosting all-important sales volumes in both drinks and snacks. In the company's Q3, though, these rose a respective 8% and 4%, quite admirable considering just how mature its brands are. Pepsi Co Portfolio includes Pepsi, of course, but also Tropicana orange juice, Doritos, and a score of other familiar names. There are always more of these to sell to a massive consumer base that knows and enjoys them. While PepsiCo will rarely, if ever, show growth spikes, its business should continue to rise steadily and continue throwing off mounds of cash as it does so. PepsiCo will serve up its dividend next January 7th to stakeholders of record as of this Friday, December 3rd. That's why the stock would yield 2.7% at its current price level. So as you guys can see, it says right here, PepsiCo will serve up its dividend next January 7th to stakeholders of record as of December 3rd. So what this basically means is if you are someone who currently owns shares of PepsiCo as of this past Friday, December 3rd, well, you will be in a position to get to reap the rewards of their dividend payout. Now, my friends, that potentially might also mean PepsiCo won't necessarily stay up here at the top of the list at number 2 or 3 for too long, because it might just be that people are like, hey, they're jumping on board, they just want to get that payout, and then maybe they jump ship in a few weeks. So don't be surprised if Pepsi does kind of fall back down a bit. Realty Income Corp, I'm surprised they're not actually higher. But yeah, I mean, I'm satisfied with how things are going, my friends. I hope you guys are too. You can't be disappointed with an 8.27% return with this current market. That's the key thing, because it's been very, very bloody. And, despite it being the holiday season, things aren't really as, it's definitely not the season of giving with the market. I will say that right about now. But let's dive into our earned dividends before we jump ship, because I want you guys to see that, like I was saying, we have our REITs at the top. Our total earned dividends to date is $41.84, with NEWT at $8.84, and then Realty Income Corp at $4.18, followed by Verizon, just right behind Realty, at $4.15, and then everyone else. And I'm going to be anxious to see as we get our newest baby into the mix, IIPR, because we haven't received any dividend payouts yet, since we didn't own them we didn't own them for too long. So too late to buy innovative industrial properties 9 hours ago. Hold up. Let's see what this says. It was once the only pot REIT, but now it has competitors. Sure, it's going to slow down a little from here, but growth is still in the cards. So for those of you guys who don't know what IIPR is, and maybe, this could be a better video for another, maybe I dive into this full article for another video, or maybe I do a video for this week diving into this. I think that's what we're going to do. We're going to do that, my friends. I'm going to hold off on diving into IIPR in this particular article, because I think it might have some gems, at least a little motivation to help inspire you to not jump ship on a company like them, because like I said, they're newest to our portfolio. So, hey, if the article is like, yeah, don't buy them right now, that wouldn't be good, because we just added them. But we will see what the article suggests. And either way, I'm doing what I do. I'm doing what I believe based off of my research and my actual beliefs and thoughts about what they do, who they're targeting, and where I believe they'll be in 5, 10, 15, and 20 years from now. But on that note, my friends, I do have a link down below to M1 Finance where you can start your own dividend portfolio. Yes, you can start to add $25 a week to set it on autopilot connected to your checking account, and it's just going to do it for you automatically. You don't got to think about anything. You just set it and forget it. I love it. So definitely check that out. Got a link down below. You can start your account with M1 Finance and get some free money. I do have a link to Webull, which is one of my other favorite brokers as well, where you can start investing with them, fund your account, and get some. I mean, they have different promos all the time. Usually it's free stock. Sometimes it's a little money. I mean, probably going to be some Shiba Inu. That's what it was last time. I think they changed it back to some stocks. So can't say who it's going to be, but usually they have some good gems in there. It might be someone you don't think is, going to do well or is doing well, but they usually have good recommendations. So if you do get some free stocks, if you go with Webull, hold your horses when it comes to selling them. You might think you got a bad pick. Just hold it for a few months. I'm telling you, because I did that. And yeah, Ford, for example, has just skyrocketed since I was given a free Ford stock and I sold it. So you don't want to mess up like I did. But all right, my friends, I hope you guys found this video helpful, motivational, encouraging. Definitely consider starting to invest. grow your money. Get your money to work for you. Don't just go out splurging, wasting it all at the club, the bar, this, that, and the other. No, invest some of that hard-earned cash, get it to work for you, and hopefully you're going to be seeing some nice returns, much better than what you would if it was just sitting in a savings account. That's for sure. But all right, I got to keep it moving. Give this video a nice little thumbs up if you found this video helpful, motivational, encouraging. And of course, subscribe to the channel. Hit that notification bell so you guys can stay up to date on all of our latest and upcoming video content. But all right, definitely look out for our growth portfolio coming out tomorrow. And like I said, a video diving into IIPR later this week. But all right, my friends, much appreciation for watching. But you already know I got to keep it moving. But I'll see you in the next video. Peace.